Well, hello everyone. Thank you for joining our BAMCO new co-issue marketplace webinar. We're going to, as we normally do, we're going to give it another 3 minutes till 10:03 Pacific, and start just so we can let the final group join, and we'll be back at you in 3 minutes. Well, all right, we're going to go ahead and get started now. Appreciate everyone for joining. Um, there's lots to cover here. We're introducing our new co-issue marketplace. As the name suggests, it's a basically an extension of BAM, bulk auction manager, bid auction manager, and similar. It is a marketplace similar to BAM marketplace, and we'll talk about that. Justin's going to talk about that extensively. But I'm going to jump right into it. For those of you that don't know me, my name is Phil Rasori, Chief Operating Officer of MCT. We've got, whoa, that looks like a little, there's a typo that we didn't catch there. Apologize for that. We've got not Andrew Rhodes, but we've got Justin Grant, who is head of our investor services. And we got this name right. We got Chris King as well on the, who is with Mr. Cooper, and he SVP of Business Development, but from our perspective, as I'm sure their biggest partner and correspondent, effectively runs correspondent for Mr. Cooper, and they've been a great partner. And just we'll talk about this throughout the webinar here, but this is a BAMCO, as we'll talk about, is an initiative in transparency and pricing efficiency. Just to give a shout out to Chris here. They've been absolutely critical in the whole process for BAMCO, but also with BAM, also with BAM Marketplace, and some of the shadow bidding that we did back in when we started shadowing back in 2018. So I'll talk more about that, but they've been a great partner to help us with basically just increasing transparency, and we'll talk more about that. But basically, when I say transparency, this is getting prices of unapproved buyers and sellers, buyers and sellers that are not papered up with an MLPA, if you will, and getting those prices into the best X to get better transparency and better efficiency of price execution in the best X, which of course is what MCT specializes in on the loan sale side. So for the agenda, look, I'm going to go over our vision here, a little bit of history. Justin and I will we'll go through kind of trends in co-issue execution. And then Justin's going to go through what exactly BAMCO is, and the value it brings to our MCT client lenders, and also new potentially new co-issue buyers that want to get into the space. And then Chris King is going to go through just general co-issue execution, talk about from a buyer's perspective, the benefits that he sees from a platform like BAMCO, and then we'll do a little bit of Q&A with Chris. So like I said, we're gonna jump right into it here. So just going into our vision here, I want to start by a little bit of a history, trip down history lane, which for those of you that know MCT webinars or specifically ones that I'm involved with, we do this a lot. But basically, look, we've got a graph here from basically the last 8 years. We probably should have went back the last 12 years, right? 12 years ago, almost 13 years ago now, B of A pulls out of the market and correspondent, because we're talking about aggregators here, and when we say whole loan sale executions for agency execution. So 10 years ago, almost 11 years ago, 2012, B of A pulls out. We at that point, we're just going to name names here since everybody knows. Wells Fargo carried the market through 2012. The average buyers was on the aggregator side was about 2.5 to 3. So 2013 hits, the taper tantrum, that kind of gets MSR for the first time since the Great Recession. That gets MSR more of an in vogue asset, and so you start to see a proliferation of smaller aggregators come into the space, and a couple bigger ones, and so that starts to push up. So you can see now we start off, we're about 6 or 7 average bidders in 2014, and then you can see it slowly just kind of rises. 2016 and 2017, you can see that second derivative, the curve kind of gets steeper there, and that's really because with BAM, we were able to, it was more conducive to posting your bids to the BAM platform, and sending your bid tape to more aggregators, right? That kind of plateaus a little bit there in 2019, 2020. Of course, we have we have some issues in March of 2020, and then that kind of brings the average down, and then we continue off in the right direction here. Ever since 2020, we keep moving up, and that's the average bid. So we're up to basically 20 bids per loan sale. This is again on aggregator execution. So the point is here, we have very good efficiency. Look, from a lender side, that's been the key difference here. Obviously, the drop in the market, the rise in rates has been far greater in 2022 than it was in 2013. But the first half of the year, there was a lot of comparisons to 2013 versus 2022, right? The market movement at that point in time, before the second rise, the market movement of the first 2 quarters of 2022 was fairly similar to May and June of 2013. The difference was actually a good difference. Was that in 2013 there were only 2 primary buyers on the on the aggregator side, and we had a decoupling between the market and execution, not to the extent that we did in March of 2020, but very close. And so executions really got hit. 2022, not the case, because we had a very, very robust market in the aggregator space, and that's shown here in this graph. So part of the reason for, again, the big move up between 20 and 22 was that in 2020 we developed BAM Marketplace, which again allowed unapproved sellers to see bids at live bids from buyers that they were not approved with. So that again was another facilitator of new executions, new approvals, and that's why you've seen that number go up and increase in, again, just taking out, and if there's any underwriters or post closers on the phone, they might not see this graph the same way we do on the capital markets secondary execution side. But the bottom line is, when we're looking at pricing transparency, pricing efficiency, and just best execution, you want to see this graph over time positively sloping. That's the bottom line. Now, that brings us to today. You can see I've got 18 aggregators here, so this is a little bit lower for a couple of reasons. But basically, you can see where we sit in a robust best execution. I should say a robust kind of our dream client. From an execution perspective. Again, when I say dream client, I mean a client that we know has the best opportunity to get the best execution when they're executing loan sales, and that's really, at the end of the day, that's a client that's agency approved, but they're not, number one, not emotionally connected to holding servicing. And number two, they don't have some emotional aversion or just an aversion in general to selling to aggregators, right? So they're truly looking at the best execution. Now, there's, as far as retain versus release decisioning, there's a lot of factors that go into that execution, right? So that has to be a robust execution. But at the end of the day, when you've calculated that internal rate of return, all of those costs into what that retained MSR value is, then you stack that up against what your aggregator execution is, what your co-issue execution is. That's your best X. So when we look at clients like that, this is what we see. This is the breakdown, and you can see that co-issue, the average number of co-issue bidders that we have of counterparties, and this is across the market, is less than 3. And we are not underwriters at MCT, we're not post closers, but the whole industry will agree that from an operational perspective, from a post closing or underwriting perspective, this really makes no sense, right? There's no reason that you should have that, you should have 6 times the amount of whole loan aggregator executions that you should co-issue executions, provided that the co-issue buyers exist. Now, as Fannie Mae created Servicing Marketplace, Freddie Mac with Cash Release Exchange, and some of the other initiatives that they have going on, there has been an ability for co-issue buyers to get their grids out, and Chris will talk about that. They're a big buyer on the flow side. But we've still seen, and that has helped these co-issue, the number of co-issue bidders move in the right direction. It used to be less than 2, but you can see that we sit right now in a lopsided graph here of execution outlets. The bottom line, and here, really getting to the punchline of what we're doing here with BAMCO, is we do not think that this graph should persist. We want this to change. We think it should change. Again, this is for agency approved, sellers, obviously. at the end of the day, the bottom line is there's really no reason that you would sell, to an aggregator and wouldn't sell to that aggregator on a co-issue basis, right? The only reason you wouldn't sell to the co-issuer is if you don't like the servicer or you don't like the custodian, or primarily not the servicer. That's the issue. Well, you got that same problem if you're selling the whole loan. So and again, another reason that we have Chris on the phone here is that they were early on in this, that they saw that the future is to be able to buy loans, both whole loan and then get that servicing, not necessarily buying the whole loan, but buying on a co-issue basis. And so, looking at what this graph kind of currently produces, and this is where I'm going to pass it over to Justin. But before I do, you can see that we've got basically this is a graph that's showing where for those clients that I just described that are doing that true best X between servicing retained, servicing released, and also aggregator whole loan execution. You can see that 60% is going to the aggregators. Now Justin will talk about how that's changed, but the bottom line is that we do have a couple clients that have a large amount of co-issue buyers and a large amount of aggregator buyers. Their graph does not look like this, right? It does not look like 60% are going aggregator and 17% are going co-issue. It's a lot closer to, frankly, even in some cases in the other direction. And so, look, there's, MCT is, still primarily going to be, focused obviously in aggregator best execution space. And we could, there's a lot of reasons, obviously, from that the buyers will talk about, Chris can talk about. There's tax advantages. There's advantages of potential on the depository side of putting those loans on a whole loan side, either to private securitization or to the balance sheet. And then there's things what we call security completion, high balance de minimis. There's reasons that at the margin, aggregator execution can be far ahead of anything on the co-issue side. But for the bulk of the run-of-the-mill clean agency execution, what we're arguing here is that over time, these graphs, these two bars, need to come closer into parity. We believe that they will, because again, from a seller side, it makes sense. And from a buyer side, we see a lot more interest on the traditional aggregator buyers in moving to basically a model that, frankly, Chris and Mr. Cooper have already moved to. So with that, Justin, I'm going to kick it over to you to kind of go into the specifics of BAMCO. And again, I apologize about the name there.
No worries. Thanks, Phil. And yeah, kind of before we get into the specifics of BAMCO, I know you kind of teased everybody there with the high level what it is we're doing, but it is important to kind of understand, how we've gotten here, from a market standpoint. And so I think this graph is pretty powerful. We're bringing it all the way back to end of February, beginning of March, right before COVID. And, to your point, we're looking at the entire MCT client base here, which does include a portion that don't have the ability to sell to the agencies. So it is skewed a little bit towards the aggregators, but you can see the trends. They're obviously, a very large chunk being sold to the aggregators pre-COVID, and then March hits and everybody knows what happens. Rightly so, aggregators have to pull back on pricing with the volatility and just completely unprecedented market. And so a huge spike in just agency executions, primarily retaining servicing. Really, those lenders that had the ability to do so, as folks were basically dropped servicing values to zero, forbearance and again the unknowns. Nobody was paying anything for servicing, so if you had the ability to retain servicing, you did so. You're essentially getting the servicing for free. And then as the market began to normalize, you see servicing values come back, and thus aggregator execution slowly returning. But the key there, you look at the co-issue execution there at the bottom in blue, starting to gain share relative to those that are retaining servicing. So and that's continued. So again, the overall theme, especially now with folks being so cash strapped, volumes are down. We've seen a lot of lenders who, primarily retaining, have slowly pivoted to, selling released. And again, a big chunk of that is co-issue there. So to Phil's point, that's that's garnered a lot of attention in the space, but also COVID really pushed a lot of lenders to get those agency approvals when they maybe didn't have them before. So now, we're specifically the MCT client base, and I'm sure, outside of that as well, there's a lot of lenders who are now have the ability to go directly to the agencies, and especially the cash windows. So again, we think, folks like Mr. Cooper, who are really early on this trend, that from a buyer's perspective, it really makes sense to be able to offer their clients the ability to sell them loans, however they want to, be it, whole loan or, through an agency co-issue execution. So, that really let us in. Phil, if you want to go to the next slide, or Ian, if that's you, what is BAMCO? And I know before I get into that, I just want to touch briefly on BAM Marketplace, because that BAMCO is really an extension of the functionality we've developed with BAM Marketplace. And we put this together really in the throes of COVID, again, when we experienced so much volatility, and we had such dynamic pricing from aggregators, not necessarily in a good way, where every day you were seeing folks increase their adjustments and stop buying certain loans. So really, it was our mission to try to provide a lifeline to our lenders, and especially those that didn't have the ability to sell to the agencies. And so, we developed BAM Marketplace, which really allowed you as a seller to see other execution options that were out there. And with some of the tools we developed for buyers, it allowed it very easily for buyers to step in who saw an opportunity at the time. Maybe they were in correspondent, but not in a big way, or weren't in correspondent, and again, saw an opportunity to get in, and through BAM Marketplace, really be able to expose their pricing to a bunch of sellers instantly. So you can see there the value, and just again, that transparency, again, as a lender, if you're selling, being able to see and make sure that, the investor pricing you're currently receiving from the investors you're doing business with is at least up to par. And it's very easy to see, right? If you're missing out on, certain investors that, may have better pricing, whether it's, across the board or certain types of loans. And again, from a buyer's perspective, easily broadcast your pricing out to the market, which now we have about 230 lender participants as sellers. So it's a good chunk of lenders out there, a good mix of independents and depositories, but the key being, that transparency that Phil is talking about. So, that we really found that BAM Marketplace was, a very efficient way to match buyer and seller. again, where it makes sense. And so, hence BAMCO now pushing that functionality forward, and making that available for agency co-issue transactions. And so the way that works, the way we can handle it, because obviously co-issue is a little different, and Chris will kind of go into some of the basics of what is co-issue for those of you who are new to co-issue or maybe just got your agency approval and looking into it. We have other clients, again, who have retained servicing for a long time, and this difficult market, it's getting cash intensive. But from a buyer's perspective, we can handle pricing, whether it's, kind of the traditional grid-based, those of you that already participate know what I'm talking about, whether it's in, a Fannie servicing marketplace or, outside of agencies, kind of concurrent transfer programs, Freddie's cash release. We can handle those grids. We also have buyers wanting to be able to provide loan level bulk bids on MSR values. And so our BAMCO can support that as well. And so you can see that from a, again, from a, buyer and seller perspective, just being able to expand those execution options that Phil was talking about there, right? Where basically what that graph was showing was, for our average client who has the ability to sell co-issue, on average, they're only looking at 2 to 3 different investors. And so BAMCO is going to be very conducive to seeing other buyer options out there, like Mr. Cooper, right, where those 2 to 3 investors you're looking at in your loan sale, now you're going to be able to see additional Fannie Freddie co-issue takeouts and be able to evaluate. And I know we've got a lot of MCT clients on the line, as well as a lot of non-MCT clients. Those who are clients know, within our kind of user interface, our BestX tools, we make it very easy and convenient to monitor those additional executions. So as you're going through the normal course of your loan sales and evaluating your aggregator bids on top of your agency retain and release pricing, we kind of highlight and call out those additional BAM marketplace and BAMCO executions, so you can easily see how they stack up against your approved investors that you're selling to. And then we provide tools to kind of make that view that historical performance over time, so that a lot of you want to see consistency over a period of time, and you can easily evaluate that what kind of the win percentage would have been over the last 30 days, 60 days, and so on and so forth. Really help you get comfortable that a potential new counterparty you're evaluating is going to be one that's meaningful. And frankly, from a buyer's perspective as well, and Chris can speak to this later, but when buyer and seller are matching up, you want to make sure it's gonna work out, right? That you're not going to go through the hassle of getting approved and doing all the legwork with the application, just to kind of find out that it's not going to work out, pricing's not competitive enough, and you're not going to get any loans. No, neither party wants that. So this is really kind of where BAMCO and BAM Marketplace provide that proofs in the pudding as far as the execution there. So, and once after bringing that transparency, once you get approved, with a Mr. Cooper, from there it's kind of business as usual. However, the two of you want to operate, again, whether it's part of a Fannie or Freddie's one of their concurrent transfer programs that each have, or maybe it's outside, what I like to call the old school co-issue, pre-cash window there. It's up to you. And again, we do fully expect we'll see some buyers that want to be able to have that flexibility to provide loan level MSR bids And if that's how they prefer to operate, again, BAMCO will be able to facilitate that into the best X. One of the key differentiators, though, between BAM Marketplace, because again, I know we've got some sellers, some participants, MCT participants in BAM Marketplace. We will not have the security spread commitment option in BAMCO that we've had in BAM Marketplace. For those of you on the line who aren't MCT clients, that's kind of a key. That's been a key differentiator we've touted with BAM Marketplace that allows buyer and seller to transact before being approved, and that just allows them to basically bid on a spread to the underlying security, and then once you've got an approved counterparty, going in and finalizing a commitment there on. But it's a nice way. Nice way to kind of bring confidence to buyer and seller, but obviously with the co-issue transaction, a little bit of a big difference being that Mr. Cooper can only control their MSR value. They can't control the you'll be receiving from Fannie or Freddie, and so that makes that not quite doable on the the co-issue side, but we're going to be fully invested into making this facilitating this type of transaction, facilitating the approval process, really helping to remove any of those traditional speed bumps or sticky points, pain points that come along with getting signed up with new investors. So think document transfer financials, helping with that. If you're a new MCT client, you've probably had experience with starting to load your financials onto our system, and we're now early workings of bringing that functionality so that you as a seller, if you're getting bids from a buyer like Mr. Cooper and BAMCO, we'll make it easy for you to transmit your all the required documents and financials that Chris and his team would need to get you up and running and approved. So just keep a lookout from us on that, because we're very committed to the space and making that as seamless as possible for everybody. Phil, you want to bump on to the next one?
Awesome.
Again, we're extremely excited to have Chris on the call today, so I'm gonna pass it on to him. I know we've probably got some folks on here who are, again, new to co-issue, or maybe have just retained servicing, but looking to get into the space. So I want to start off by giving Chris the opportunity to just kind of walk folks through, what it is, what is co-issue sale with the agencies. So thanks, Chris.
Awesome. Thanks, Justin. You hear me okay?
Yeah.
Awesome. Well, cool. Hey, guys. Good morning for those on the West Coast, and good afternoon for those on the East. And more importantly, Phil and Justin and team, thank you. Tremendous respect for MCT. The way I think about it for those participants on the call today, I work for Mr. Cooper, but I'm going to kind of give you feedback more from a industry perspective, because I think this is an important topic, and I applaud for bringing this topic forward. So when we think about co-issue sales, right, for like someone like Mr. Cooper, like, so if you're a correspondent client today with us, and you also are approved with Fannie Mae or Freddie Mac, there's no other counterparty steps to get approved to do co-issue. So that makes it super efficient if you want to move forward with co-issue from a counterparty's perspective. In addition, right, the presumption is that, as Phil alluded to earlier, obviously some of the sellers on the call may have Fannie or Freddie relationships, and then some are working towards getting their Fannie Mae or Freddie Mac approval. So, I'm going to go with the assumption that you're either already approved or will be approved with Fannie Mae or Freddie Mac. And then you'll kind of start your process with your account rep. Let them know, let's go down the Fannie Mae path first. You'll let Fannie Mae know that you like to be a participant in the Fannie Mae Service and Marketplace. If you're an approved counterparty, it's highly likely that they'll go ahead and turn you on for the Service and Marketplace. The work that MCT is doing is absolutely amazing if you think about the transparency of how the pricing will flow through the platform. So effectively through the BAMCO, they'll pull in Mr. Cooper and other entities' pricing. So you'll be able to see shadow pricing and compare, and they pull forward the Fannie Mae price combined with, in this example, the Mr. Cooper MSR value or other MSR values that they're attaining, and you'll have a complement to your best execution, and you'll be able to do shadow pricing for a period of time, and you can make a decision whether Mr. Cooper or potentially another co-issue investor is optimal for you as a seller. So once you kind of make the decision, as you're kind of seeing the best execution pricing, as I mentioned, let's just for example, there's really no other steps on the Fannie Mae side, on the counterparty side. Next step would then be, typically Fannie Mae has gone in the path of what they call a tri-party agreement. So it's an agreement between the seller, Fannie Mae, in this example, Mr. Cooper. And so that's a base agreement that kind of outlines the structure of the Fannie Mae Service and Marketplace. If you think about a data and doc delivery, it's incredibly efficient. So using Fannie Mae in this example, they take the ULDD doc file that comes out of your LOS system into the Fannie Mae platform. And most S&P investors like Mr. Cooper are going to take the data that comes out of the Fannie Mae platform. So there's no additional steps for you as a seller. So incredible efficiency there. And there's a couple other complements to the Fannie Mae Service and Marketplace. I mean, if you think about it, typically you're getting 100% of the cash proceeds, roughly somewhere between 3 to 5 business days after you take down the commitment. So if you go, you get your API, which triggers the price in the MCT BAMCO system. Your MCT partners will help you as far as the best execution, obviously help you with the commitments of the Fannie Mae platform, and that kicks off the process. And typically by the time you do the data delivery, certification, the document custodian, you have your cash in typically 3 to 5 business days. So really efficient use of cash. And then at that point, you have help deliver the documents. From the Fannie Mae perspective, easy transfer portal. It's how you partner with Fannie Mae, and then the co-issue investors get the documents pulled down from the Fannie Mae system. And kind of the theme here to the valued MCT clients and partners on the call is this entire thing is built from a seller experience, right? So we're not thinking about it from an investor perspective. We're thinking about MCT and its value partners, and okay, what's our ease of execution of how we can complement the transparency they're providing with the pricing, and how we can work with you after that to continue to make the entire process efficient. So in summary, on Fannie Mae, you work with your account rep, formalize the approval, partner with the MCT partner so you can get the shadow pricing. Once you get approved on the counterparty side, which is pretty seamless, particularly like a Mr. Cooper, if you already corresponded approved, you do the tri-party agreement, the review of a goodbye letter, and then you're off to the races. You can just go live. It's pretty efficient. Freddie Mac is substantially the same, a little bit different. So with Fannie Mae, you have to go and select in the Service and Marketplace, and this is where your MCT partners can help you a lot. They'll talk to Mr. Cooper, and they'll talk to other investors and kind of give guidance around best execution. And so in the Fannie Mae Service and Marketplace, you select which partners you like to work with. So maybe Mr. Cooper or one of our competitors. From a Freddie Mac perspective, the Freddie Cash Service Release Exchange, which Phil alluded to earlier. So the way it works a little bit different. You actually have a direct relationship with Freddie Mac. And there's no tri-party agreement in this example with Mr. Cooper, if you choose this example. And so as you get approved on Freddie Cash Service Release Exchange, there's roughly about 9 to 10 investors behind the scenes who are providing the best execution of the grid into the Freddie Mac Exchange model. So I can't comment well about the incredible work the MCT's done here. So it used to be if you had to go into the Freddie Mac system, just given the progression of the platform, you'd have to go look at one loan at a time. Now you can work with your MCT partners on the APIs. You can bring forth that pricing out of the Freddie Service Release Exchange platform, and you can get pricing on a large batch of loans and get your best execution a lot more efficient, which ultimately saves you guys time. On the Freddie Mac side, once you're approved the Service Release Exchange, as I mentioned, like 9 to 10 investors that operate through that platform. You can choose, as Phil alluded to earlier, you may have some certain investors you like work more than others, and you work with whichever of those investors you choose with. You can cut off the ones you choose not to. From a data and doc perspective, again, we built the entire experience around, you the seller, right, and MCT's value partners. So from a data perspective, it's going to flow from LOS into the Freddie Mac Fast platform, and then we're going to pull the data down from the Freddie Mac platform versus call this, another step. Similarly, on the document, we're going to use the FAST structure as well. As the documents are delivered to the FAST program, we build APIs behind the scenes that pulls the documents down from the FAST platform. Again, we're trying to think about, in partnership with MCT, how can we help you get the efficiency of pricing, and then how can we make the experience after you've committed loans to be really, really strong. So what's great about this, this overall co-issue platform has matured over the last 5 to 10 years. I think there's a great investor base behind it that's continue to push the platform. And the way we think about it, and I think some of our counterparts who we compete against, we want to make it whether you execute the correspondent or kind of issue, how can we make it effective and fluid and ease of transaction, right? And that's really what we're trying to do. I will comment on the Fannie Freddie, and I'll turn it back over to Phil. These are bifurcated structures. So when you sell to a co-issue investor, like use Mr. Cooper, for example, we'll buy the MSR. The loan is, of course, sold to the respective agency, Fannie Mae or Freddie Mac. Then it's a bifurcated structure. So the reps and warrant, the origination and warrant stay with you as a seller. And so if there's a downstream repurchase or whatever that may be, hopefully there's none, you would work with Fannie or Freddie directly versus work through the, in this example, like versus a situation where you may have sold to an aggregator and then the aggregator comes back through to you as a seller. You would work with Fannie Mae or Freddie Mac separately. So pretty efficient process. It's very streamlined. And to be honest with you, probably the one thing that's been lacking over the last couple of years is the efficiency of the pricing, how it flows through. And I can't commend MCT well enough for the tenacity to figure this out, because these used to be old grids and stuff like that, and it was terrible. And the efficiency, how the pricing flows through. And the last thing I'll comment is what's been mature about the Fannie and Freddie respective co-issue programs is there's no minimums or maximums, right? So in other words, back in the day, if those of us who've been around for a while, it used to be there minimums. Now there's no minimum. So it's a very fluid platform. And I think through great partnerships like the MCT, what the agencies are trying to do, Cooper and some of our great competitors that we compete against, we're going to continue to evolutionize the program, really built around the customer, really built around the seller and the customer experience, which is great to see the progression. So hopefully, Phil, that helps, and I'll turn it back over to you.
Oh, that was great, Chris. Really appreciate it. And before we go into the summary, just want to go back, kind of go through a couple of questions here for you. But before I do, Chris made a couple key comments there. About no minimum, right? That's the game changer. The old school of thought, from a buyer, was I want to buy a small amount, or I want to buy from a small number of lenders, a large number of loans, right? And that just simply, especially in a market like 2022, is not, frankly, isn't feasible, and just from a pricing efficiency and execution standpoint, just doesn't make sense. Chris, you guys have, going back to some of the the approval facilitation initiative that's going to be a big initiative for MCT in 2023. You guys have your fast lane approval on, or I think is what you call it on the correspondent side. On the co-issue side, how long do you have something similar, or how long does an approval normally take, provided that the seller performs on giving you documents?
Yeah, no, great question. I mean, the way we think about it is, think about most investors, you call it 20 to 25 core things, but really there's 6 to 8 that helps you transact, right? And so we basically have streamlined the process where those 6 to 8 documents, and most of it, thankfully, Phil, whether you work for your clients or let's just use maybe some of the other platforms out there where people have effective documents, maybe for the house or other place. Thankfully, now it's all shared. So we find that to be pretty efficient. So generally speaking, we outreach to a client on a counterparty approval process. The old days of trying to find stuff are thankfully behind us. And so if they have everything, we can begin to do. I mean, generally within 2 to 4 weeks, we'll have someone up and approved. Now that doesn't, on the co-issue side, they got some work to do on the Fannie and Freddie side if they've got to get those approvals done. obviously feel from the investor perspective, but we'll ask for those 8 core documents up front, and we can certainly give an example. Use the MCT team to share with their clients, and then once we have those 8 documents, generally within 2 to 4 weeks, you're up and running. That's how it works. So it's like, and Justin's example earlier, we were talking about doing shadow for a period of time. If the shadows are going well, whether it's us or another investor, they may want to move forward. We can generally get that going in 2 to 4 weeks.
Well, that's great. And for everybody on the line, this is, it seems like kind of an in the weeds topic, but if you go back to the high level of our vision of trying to move from an average of, let's call it 2.5 2.5 co-issue buyers to something of 4 or 5 times that, it gets a little bit, the only thing that can facilitate that is pushing more efficiency on being able to facilitate the approvals quickly. And so we'll be working with Mr. Cooper and other aggregators, both aggregators and co-issue buyers, to on getting a repository for documents. I would say for the MCT clients on the line, and again, like I said, that's going to be a big initiative for us in 2023. For the MCT clients on the line, you get a dual benefit there, because as you guys all know, you're all trading on Trade Auction Manager, and that's through Agile trading technologies that the broker dealers are on. And so to the extent you want to pass those same documents for the recertification, for the approvals, to the extent you want to pass it through, you get a dual benefit there. So, we're looking to help, the holy grail would be to automate, but we're, right now it's to help facilitate the approval and the recertification process on both the broker dealer side and the aggregator side, and also the co-issue buyer side. So Chris, the first question that I've got for you is, maybe just as a, from a buyer's perspective, why did you join, why did you decide to join BAMCO? And I think it even goes back to, just kind of, probably when you called me in January 2018, about shadow and just, doing some more live shadows, while you joined BAM Marketplace. But maybe you can kind of talk just, the benefits that you see from a buy side.
Yeah, I mean, Phil, from Mr. Cooper perspective, like, we look at MCT as the premier industry leading price and hedge partner, right? I mean, tremendous respect for what you guys do. And we truly believe in the whole spirit of transparency of pricing, right? We think that's in the seller's best interest, the borrower's best interest. And if you think about, co-issue, we've been fortunate to be in it for years, but, the whole spirit is how do you continue to ideate, innovate, and create new ways of how this program needs to go. And so when we think about BAMCO, we think about MCT, we think you guys will be, certainly a material partner, how to innovate this program. I mean, as far as how you get, execution solutions to market, how you get, seamlessly put pricing in front of clients. And, if you think about the co-issue offering, right? I mean, think about what you guys are doing from the value add here perspective. So number one, I mean, from a shadow basis, I love the transparency, right? You're helping the pricing come through from a fluidity basis. People can do their best execution. It may be that the shadow pricing works for them. It may not work for them, but the transparency is step one. And then if you're a seller who's never been engaged in this space, tremendous value that you're providing as far as the efficiency of how they can get access to this pricing. And then for those who do have other co-issue partners, what a great way to see another pricing in front of them, in a very fluid way through a common platform. So, and then even beyond the pricing, I know MCT does a tremendous job in its platform as far as how you do commitments and other related kind of carry-on components. But at the end of the day, this industry has to continue to innovate, and we think you guys are, one of the key partners for where the market's going to go. So to us, it was honestly, Phil, a super easy decision to partner on this.
Really appreciate that, Chris. So we've talked about, specifically, obviously from MCT perspective, we focus on price a lot. You know, you focused on price as well. But there are some other considerations, obviously, and maybe you can talk about some of the, you know, the differentiators of you know of Mr. Cooper as a co-issue buyer, and maybe, you know, in that context, maybe explain some of the, you know, like the holdback and things like that.
Yeah, of course. So, I mean, like I said, to Phil's point, I mean, you're talking about differentiation. I always correlate that, Phil, with, you know, how do you continue to be progressive, right? Thinking about what's best for a seller. So when we think about it, like, we're going to try to differentiate. And to be fair, we fully expect a lot of our competitors will follow suit, and that's okay. Then we'll just keep the cycle going of progressive differentiation. So step one, I mean, we build out these programs, like we do it in partnership with Fannie Mae or Freddie Mac. They're awesome partners. And so step one is the full 100% all-in funding. So, you know, the historical way you look at co-issue, if you're familiar with the agency or the government legacy co-issue contracts, is at times you may see holdbacks. Those holdbacks may be related to, you know, the seller sending documents or other related components. And so the way we thought, you know, Fannie and Freddie have done a tremendous job, and we partner with them tirelessly on both the Fannie Mae Easy Portal and the Freddie Mac Fast program. And so with the confidence that we're going to get documents, confidence we're going to get the data, the confidence that it's a bifurcated structure, you know, that gave us confidence, Phil, that we could do 100% all-in funding. So as you get your funding, as I referenced earlier, let's say 3 to 5 business days after you do your commitments, you're going to get 100% of the funds from Fannie Mae. Fannie Mae will go in and net out, in this example, the Mr. Cooper account. And then as part of that, we also do, you know, the settlement of the escrows as well. So we're trying to, again, take all the friction out from the customer to make sure you get all your money up front. You understand what you're getting, inclusive of the escrow component, so you get all your funding, Phil, you know, up front. Next, okay, obviously, you know, money's good. You also want to make sure these efficiencies of how the data flows and the data flows. So, you know, we've set up APIs with Fannie Mae and Freddie Mac. Therefore, as you, the seller, integrate with the FAST program and or the Easy Transfer program, Freddie and Fannie respectively, as those data and those documents are delivered, you know, we have automated APIs that's pulling those out of the platform. And that way we're saving the seller yet another step of not having to go in and facilitate a separate transfer of that information to us. So Phil, when we think about it, you know, we want data efficient, we want to make documents efficient, and more importantly, we want to get money to the sellers as efficiently as possible, because obviously they're running a business and they need their investors to think about their best interest so they can go make more loans. And that's how we ultimately all win. So I'll pause for a second, but those are some of the key things we're doing every day from a data documenting easy cash, trying to make sure we partner with sellers.
Oh, that's awesome. That was great, great education there. I think you know, just to move into the summary here, and then we've got some questions. But before I do, you know, Chris had mentioned a lot of the benefits of both the Fannie S&P side and cash released exchange. And look with the, you know, on the cash side that Chris mentioned, obviously all of our independent mortgage lender customers have always loved cash, with, you know, cash coming quick on when the loan's purchased quickly. And you know, with the, you know, with before this latest rally here in rates, you know, the 4-week T-bill was pushing 4%. There's an economic component to getting your cash quickly versus having it, you know, if like Chris said, you're getting the complete funding of both servicing and the loan asset, you know, out in three days. With that said, a lot of buyers, some of the small buyers that have contacted us, they will not be in those programs. That is kind of up to both Fannie and Freddie how they want to see it. I think that they probably want to see consistent buyers like a Mr. Cooper, for instance. So we expect that a lot of buyers, I want to make sure that that's clear. We expect a lot of buyers on this platform to not be part of those systems. The majority of the volume will go to buyers that are on those platforms, obviously, like Mr. Cooper. but we definitely fully expect the efficiency, right, of all of these new buyers and niche buyers on the co-issue side to be not be on the system. And look, that can be helpful also to the agencies. There's they as we all know, there's affordability goals here, and to the extent for whatever reason a certain buyer has a niche that hits on those on those types of loans for whatever reason, that can be helpful for the agency as well, even though they're not necessarily in the platforms like Servicing Marketplace. So look at as far as BAMCO kind of schedule, it went live on November 15th. We are Chris and Mr. Cooper were the first buyer, very appreciative of that. We've got some new buyers that are going to be announced at the beginning of 2023 in January. Definitely, any buyers on the line interested, should definitely reach out to Justin. As far as we're gonna continue to track the progress of expanding the co-issue market. We'll and really with respect to how the execution set of our client base on average looks, and how that makeup looks, and I expect to have another conference call, another webinar probably in the middle of the year regarding BAMCO and kind of where we where we sit. So before we run out of time here, I want to get to some questions. Justin, Rod had a question on just more BAM Marketplace, but do we have any any schedule for getting some ARM loans on BAM, and more in the context of getting some, I know you've got some CRA. Maybe you can talk a little bit about from a CRA perspective, some smaller bank buyers, and if there's any interest in ARM buying.
Yeah, short answer is if we had some legitimate options, we would have been shouting it from the rooftops, because I think just about every day for months now we've been fielding questions on ARMs, and it just, I know it's folks would think with rates going up, inherently ARMs would have a better rate, but really it's driven by the yield curve. We've been inverted now for quite some time, and I think we're 80 some basis points inverted now. So just selling is short answer. That's why to find a decent price for sellers does not exist. So if you're hearing of any or seeing decent rates out there, it's really coming from a depository who has the ability to portfolio, and for whatever reason kind of fits their appetite, where they're willing to offer a lower rate. And we've talked with a handful of those folks for potential buyers, but the vast majority, it's they're very limited on what they can bring in to the portfolio, and aren't really interested in opening it up too much. But not to say we're definitely still always looking, and certainly BAM Marketplace in that instance would be a great way to see executions like that. And like I said, we'll make sure that folks know about that if and when we do find some decent ARM buyers.
Awesome. And a question from Logan here, Justin. Well, I can answer this one. How many co-issue partners are currently participating in BAMCO? So that is exactly why we have Chris here on the line. That they are the first BAMCO buyer participant. Like we said here at the summary, we've got two more that are coming on, and they will be they will be announced first week of January. So and we've got those two more already set up. There's 3 or 4 more that are time. We would probably expect to have by the end of by the middle of the first quarter, I would say probably 8 or 9 buyers, and eventually that's gonna level off, right? And you'll start to it'll continually be positively sloping as far as the curve of buyers over time, but it'll definitely level off. With regards to, let's see, we have one more, actually a interesting question here. Chris, you might be able to answer this from a standpoint of e-notes. Is it easier for question here is, it seems to think that more co-issue buyers will accept e-notes. Is from your guys' perspective, is it easier on the MSR side to accept e-notes, and do you see that as being kind of consistent, where there would be more? I guess the question being, would there be more MSR buyers on average accepting e-notes versus your whole loan buyer?
Yeah, I'd say on the face, yes. And the reason I say that on the co-issue versus corresponding, obviously you alluded to earlier in your chart, there's a lot of correspondent buyers, and everybody makes investments separately, right, relative to the value propositions. Phil, typically your co-issue is going to be a little bit more of a larger buyer, a little bit deeper capitalized, if that makes sense. Not that that's not the spirit of the correspondent investors, but you have a wide variety of correspondent investors, and maybe some of them just may not make the investments in e-note capabilities for whatever reason. Typically, your agency co-issue, engineering co-issue people who have a deep understanding of the co-issue markets, and therefore their perspective is to offer e-notes. So, like, I would say whether it's Cooper or the like co-issue buyers, I'd say you find most of them substantially offer the e-notes in every execution. So we do it today in the marketplace, the exchange, and then we do it across all the correspondent fronts as well. And then we're partnering deeply right now with Ginnie Mae to do it. We've done some pilots with them, but they have to be e-note specific Ginnie Mae securities. And then we'll ultimately be able to commingle those with non-e-notes as well. But generally speaking, I think you'll see most co-issue investors, Phil, accept e-notes, just given the depth of their background and the competency of their servicing platforms.
Awesome. And I know we're over time here, but I'm definitely going to ask you this one, Chris, because I know it's such an apropos topic. Contemporary buy down loans be sold through S&P or cash release exchange? I would imagine the answer is yes.
The answer is yes, and then just like anything, it comes down to what's agency eligible, and then the servicer has to have the capability to, of course, service the respective temporary buy down. And like you're dealing with mostly astute investors who have good platforms, so the answer is yes. Have a wide net as far as what they allow.
Awesome. Well, look, with that, we're a couple minutes over. Chris, I really want to thank you for being number one, a partner on this, on a couple different initiatives with us, but especially this one, and being on the webinar here. And I appreciate all the help, and looking forward to and Justin, thank you as well. And we're looking forward to, we really think that this is a spot in the industry that definitely needs help with transparency and efficiency. And we think we're in a good position with this platform, with our client base and our partners like Chris, to really change the kind of change the paradigm here. Thanks a lot, guys.
Happy holidays.
Thanks, guys. Thanks, Chris.